The following is a presentation of TFNN. Live at TFNN. The Money Masters. Now, the Money Masters.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 21st, thankful, thoughtful Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I am grateful for your presence here today, and my outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential, because living up to our potential is what we must master each and every day, each and every one of us, folks. Let's start off with one of life's greatest belief systems. It's called the secret of success. I love it. The secret of success, folks, is learning how to use pain and pleasure instead of having pain and pleasure use you. Just think about it. Think about it, because, you know, you run away typically from pain, you run to pleasure. The secret of success is learning how to use pain and pleasure instead of having pain and pleasure use you. If you do that, you're in control of your life. If you don't, well, life controls you. Let's go take a look at who's controlling these markets here right now. The bulls or the bears out here. Our call-in number is 877-927-6648. We've got the Dow trading down 64 points right now out at 14,447. The S&P trading down over 7 out at 1551. Composite down 22 points. That's a leader in the clubhouse on the way down right now. That's off 0.7% out there, off 24 points out at 32.30. Russell 2000 down 3. The New York Stock Exchange, that's a biggie. That's off 0.5%. That's off 47 points right now. The NDX off of the NDX leading things to the downside, off almost a full percentage point, off 26 points. The trannies off 32 as well. Let's start off by taking a look at the Dow. You know, we're coming towards the end of the week. Obviously, I'm getting a quick start out here. But what it is you want to be paying attention to on the S&P, it's really the S&P, because we got the Dow up over its 2007 highs. The composite up over its 2007 highs back in 2012. The Russell 2000 over its 2007 highs. New York Stock Exchange, different picture. It's only made a 0.786 retracement from the 2007 highs down to the March lows out there. I got the trannies up over at their highs as well. So it's really all about, right now, in my opinion, it's really all about this guy here, this guy or gal, the S&P 500. So we've got the weekly chart up on the screen here. You can see traveling in a very nice rising price channel out here. And speaking of channels, folks, if you haven't had a chance to go over to the homepage of TFNN.com to sign up for this evening's workshop being hosted by none other than Bud Rolfs, out of retirement. The title of the workshop, The Coming 4 Years in the Market. If you want to really understand a big picture view, if you want to understand how to use big picture views and then bring those down to what's going on a daily basis, a weekly basis, even an intra-period basis, come attend tonight's workshop. You will be so pleased that you did that. All the details on the homepage of TFNN.com. It's from 6:30 to 8 p.m. It's an hour and a half this evening. And if you can't be there, that's okay, because it'll be archived on your members page. Now, we're taking a look at the swing point here from the week in at the swing point at the highs of 2011 in October. And what we can see here, you'll see that I've got the two red lines, the horizontal lines going across my screen. That's the swing point low and swing point high. Now, the S&P has not made it up to the swing point high. 2 weeks ago, you closed inside it. That was the week ended March the 8th. I actually had a close inside the S&P, 1551. Closed inside the swing point. Doesn't matter that it was on lighter volume. Was it lighter volume? Yes, substantially lighter volume. Does it matter? No. Once you close inside the swing point, it says, okay, I might want to go ahead and gravitate, at least go test the high of that. That high would be 1576.09. Has it rejected the low? No, but this week on the weekly chart is the first time after breaking into that level, because last week here, the actual low was 1547.36. So last week on a weekly chart was not a test of that swing point. This is the first test that we're having. If this week, if tomorrow, you get a close below 1546.72, you will have a rejection on price and volume, both on a weekly and a daily chart out there. And that says, you know what, maybe it's not ready to go tag the 1576.09. Do I believe that it will? Yeah. Does it have to be this week? No. Can it be some point in the future? Absolutely. But, the market's still in an uptrend, and there's some other signals that, I've been looking at that say, okay, maybe the market does want to move higher, but first, it might want to actually pull back. So the number to be watching, it's the number to be watching today, because a daily chart would give you a signal. Now, today here, you get a test of 1546.72 and a close back above that. That's bullish. Because on the daily chart, in fact, let's go switch over to the daily charts. Let's go take a look at that as we take a look at the S&P 500. So remember the number, I'll just draw a line out here, or approximately the I'll try to draw out where the 1546 level is. Let me put that first in black. Let's see if I can raise that up. Might be a little bit more difficult for me. 1546. That's like about 1546.80. You're going to have to trust me on this. So let's take a look at the session here from March the 18th. So March the 18th, it tests that level, gets down to 1545.13. Remember, we're dealing with 1546. First test of that area. Then March the 19th gets down to low of 1538. Closes back above it at 1548.34. Yesterday was not a test of that area. Yesterday the low was 1548. You got some juice. You got some momentum to the downside. Looks to me like today maybe another test of that level. If you test that level, meaning get below 1546.72 and close above it, that would quite frankly be on a daily chart. That would be very bullish. In fact, you'd like to see it close above 1550. But if you close above 1546, quite frankly, that would be very bullish from the daily charts out here, because you will have rejected the bottom of that swing point 3 separate times and closed above it, when you've had opportunities for the bears to actually take control. And that just says that maybe what the S&P would want to do is actually go up to 1576.09. Now, today, let's just take out the other alternative, which it does close below 1546.72. That, folks, would then set up nothing more than a rejection of that swing point low, and likely, well, the other 2 days, we've gotten into that swing point low with light volume out there. So we'll go take a look at the ETFs. That's really the setup, and this is what you should be paying attention to. The next chart that I would say, I would pay attention to this as well, would be that New York Stock Exchange, right? It's only made a 0.786 retracement. So let's go take a look at the NYSE. Let's go see what it has been doing out here in the marketplace. So let's go look at both the bullish and the bearish case. Here's the weekly chart. So the weekly chart on the New York Stock Exchange, certainly not very bearish from a look just yet. But let's go take a look at the daily chart, because it's really the daily chart that I want to peek in on. And what I want to look at on the daily chart, what we're going to look at here is we're going to look at the, in fact, one of the things that we can look at, we'll go back to the S&P, but let's take a look at the daily chart of the New York Stock Exchange. We're going to put a red horizontal line across the screen, because what happened yesterday, we're taking a look at the most recent swing point, which is the March 15th level. The low of that swing point, 9091. It's 9091.05. And what happened yesterday, and you'll see it's a gap down. So you see that little gap down area. So yesterday was a test of that, setting up maybe its first line of resistance. It tested it, and it rejected it. So that is what sets up so it was a test of a swing point as well. So they're here this morning. You can take a look at what the New York Stock Exchange, in essence, it is gap down. When I say gap down, I'm really just referring to yesterday's close, not the same type of gap where there's a gap in price, where there's an airspace out there between the two trading sessions. But, pretty strong move in order to be able to gap down just like it did. So right now you can see just nothing more than a little bit of a dance between the bulls and the bears out here. Where the NYSE has support really is going to be the March 5th level. March 5th is a key trading session. The New York Stock Exchange, even though it's showing some weakness, nowhere near that March 5th level just yet. But should the market decide to start pulling back, that's what you would be paying attention to, is March 5th. I would be looking at the low there, which is 89.39.99. But one thing at a time. But what happened yesterday in the marketplace was you had the New York Stock Exchange at least test that gap, and that held as resistance. If we go back actually and take a look, now let's go take a look at the Dow. See what the actual Dow did do out here, setting up a nice bearish engulfing candle so far in the trading session. And what the Dow did yesterday was also rejected the swing point. The swing point that it got over was March the 15th. That high was 14,539, 14,539.14. Yesterday gets up to 14,546.82, but closes at 14,511.73 out there. That was a rejection of a swing point, and it was on lighter volume. Let's go take a look at the ETF structures out here. Let's go use the ETFs. Everyone has ETFs, so let's go take a look at the ETFs, and we'll use that from a volume perspective here. We take a look at the ETF. Yesterday, you did 5.9 million shares at 5.9 million shares. Actually, I take that back. Was going into 5.3 million shares. So that was not a failure on volume per se. It wasn't. It wasn't on the. Let me just refresh my screen. Make sure I've got all accurate data. And the SPY. Let's go take a look at the SPYs out here. I spoke in jest. Let's go take a look at the SPYs as we head out. You've got a little bit of a gap down, obviously today. Not obviously, but you do have it in the diamonds out here. But let's and where you're going to find support here in the diamonds, untested support so far is going to be that March 5th level. So inside the diamonds, that's going to be your 141.69 low from March the 5th out there. Untested, that is where you've got the most recent gap out here. Let's go take a look at the SPYs. As we take a look at the SPYs, what the SPYs did yesterday, the SPYs were moving up into the swing point, 113 million shares moving into 126. There was your failure on price and volume. Now, why do I say price? Well, when we took a look at the S&P, we're really measuring the low of the swing point. That low inside the SPYs is actually 155.91. You got up to 155.95 yesterday on lighter volume, so it tests the swing point. The diamonds get up over a swing point, close back below it. There is a failure going on there as well. So that's it. Now, let's go take a look at the Russell 2000. As long as we're here inside the ETF structures, let's go take a look at the IWM. Now, interesting note here that I'll point out to you is yesterday. So yesterday, I've talked about the summation index here for the last several trading sessions. And yesterday morning, as we came into the marketplace, everything except the XLP had ticked down in the summation index. Now, yesterday, we saw just a slight tick up inside the S&P. But what I noticed was the energy sector, the financial sector, and the technology sector. Those three sectors, which would make up the biggest weighting inside there, they actually ticked down yesterday. Something to think about. And we'll go take a look at those sectors. We'll go see what the price behavior is there. Now, yesterday, you had the IWM, the small caps, 27 million shares getting inside the swing point that had 35 million shares from March the 15th out there. So inside that swing point, did not test the highs. You don't really have any kind of failure out there inside the IWM. Trading lower this morning, trading down at 94.12. So far, volume in less than about 45 minutes of trading here, about 9 million shares. Real support here on the IWM, really, I would say, is going to come also at that March 5th level. That's going to be $91.60. It's at $94.12 right now. In fact, let's go while we've got, we can't do it now. When we come back from this first break, we're going to go peek into the spiders. We're going to take a look at the sectors within inside the S&P 500. Most notably, we want to go pay attention to the energy sector, the financial sector, and, of course, the technology sector. 877-927-6648. King dollar on the move, up 12 ticks. Gold up 7. Silver up 38 cents. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 92 points right now. S&P down almost 10 points, straight out at 1548. We are on 1546.72. Watch out here. Have you been watching some of the news coming out of Cyprus? I saw some pictures this morning, early this morning, of just some of the lines forming outside of some of the ATM machines that are out there. Now, what I would really love to see is I'd love to see some of the news folks actually go to the black market to see what's really going on with regard to currency. You know, I have had the privilege to travel all around the world, and back in the early 90s, right after Perestroika, I opened up a retail store in the Peter and Paul Fortress in St. Petersburg. It was actually the very first retail store that ever had been opened inside the Peter and Paul Fortress. There was a group of us that were opening up different retail stores, and I rushed real fast. I wanted to be able to get my store open first out there. Now, I did it in a conjunction, a little partnership with a group of folks over there. So I had some folks that lived there that were able to take me around. Now, during that time period, when I traveled around the world, what I liked to do, especially when I was in different countries, I always liked to stay in about the most authentic hotel that I could find, because I'd stayed at plenty of, I knew what a Hilton looked like in the inside, I knew what a Hyatt was like, I knew what a Marriott was like, I knew what a Peninsula was like, I knew what all the brand hotels were like out there, and they're comfy for sure. But you didn't really get that real flavor of the hotels. And so when I was in St. Petersburg, I was staying at this, it was a very nice, so now it was a nice Russian hotel. And what was interesting is, I talk about is truly where I understood, well, I was there and in China, while I was traveling in China, where I really understood the power of the U.S. dollar in the real marketplace, where there truly is an exchange of goods and services going back and forth. And in Russia, now I was obviously paying in U.S. dollars, I was paying with a credit card, but each morning that I would wake up, because inflation was absolutely rampant back there, you would see a note that would come underneath your door that would tell you that if you were paying in rubles, that the price is just going up. 1,200 rubles, 1,800 rubles, whatever. Now I don't remember, quite frankly, what that actually converted to in dollars, but it was the very first time I've ever actually truly seen inflation on a daily basis out there. What I had asked my interpreters to do after we got the stores set up, or while we were getting them set up, was to take me down to their black market. Now, black market, farmer's market, whatever it might be. And it was illegal to trade for U.S. dollars back then. As illegal as it was, that was probably the biggest crop. Forget about all the great foods or what have you and all the other products that they had there, but it was really the trading of dollars that people wanted the U.S. dollar. Now, of course, with the inflation and everything that was going on out there. Now, same thing in China. The absolute same thing in China. I'm not going to go into an incident that I dealt with there, but I would love to really see what's really not the pictures of bank lines and folks lining up at the ATM machine. That makes all kinds of sense, but I really get a sense of what's going on, panic or otherwise. Would really love to see what's going on in Cyprus at their black market. So if any of you have connections to folks over there, it would be great to really understand that and see what's really going on in the marketplace. Nonetheless, I don't know how I diverted on that story, but just simply did. And, of course, while I was over in Russia with this store, we actually had experiences with the different mafia groups over there. And I say groups, plural, because that was the next real interesting thing about owning and operating a business in Russia. The finance minister in Cyprus, he turned in his resignation, right? Now he's over there playing Russian roulette with what's his name? Who's the prime minister? Putin. He's playing, sorry about that, just kind of a brain contusion there. And so can you imagine and of course he didn't want to go over there. Of course he handed in his resignation. Putin's probably doesn't have his shirt on out there, the way he rides out there. So who would want to go take on that role? In any event, let's go take a look at the XLF out here. Let's take a look at the financial sector, trading out right now at 18.19. We had the bears really now trying to take over, and that was here on the 19th. Nice bearish candle. In fact, yesterday's candle with a nice move higher in the marketplace, never really getting outside of the body of this candle right here. So you can end up with a falling three pattern here. Doesn't have to happen today, but if you get a close below 18.35 out here, you'd have a continuation pattern, in this case here to the downside. It's not what's going on. It's not what's in place here just yet, trading out at 18.19. Volume so far this morning is 9 million shares in 1 hour of trading. Yesterday to the upside, 62 million shares. So looks like you have about the same type of volume to the downside. Boy, time absolutely flies, I guess, when I tell stories like that, they do. 877-927-6648. We've got gold. Gold is up $7. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. TFNN legend Bud Rolfs has come out of retirement to bring you a special report and a one-time only webinar that will show you what's going to happen in the markets over the next 4 years. Bud Rolfs is the former Chief Technical Analyst of the Tiger Trading Post at TFNN and is a true market innovator who has taught thousands of students how to read charts and be more successful traders. Don't miss this chance to learn from a TFNN legend and get this timely market advice that will put you on the right side of the market for the next major move. Plus, he'll show you his expert analysis on the current major markets and explain the technical setup that is predicting a move of over 50%. We're offering this one-of-a-kind special package for only $179, and the moment that you sign up, you'll gain access to Bud's 11-page executive summary where he provides you with the keys to his market call and prepares you for his live 90-minute webinar on March 21st. Don't miss this one-of-a-kind offer. Sign up today on the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 82, and S&P is down about 9. And, folks, if you haven't had a chance to check out the Tiger's Den here at TFNN, come on over to the homepage and test drive it. You can do that for $3. Just simply a great group of folks that are in there. It's really all about your peer group. If you're trying to take your trading from where you're at now to a different level, the easiest way to do that is just simply surround yourself with a peer group. And none better than the group of folks that we have inside the Tiger's Den. You can test drive that for 30 days. One of our members in there, Oda Nobunaga, that is his nickname. I love that. That is the father of the Three River Evening and Morning Star out there. As I was telling my story in Russia, he said hard currency was a massive premium in Russia at that time, and he is absolutely right. When I left the country, I had my interpreter with me. It wasn't the, it's not like the TSA lines that you go through, at least it wasn't back in the early 90s, that you go through here in the United States. And I was taking back things with me that I wasn't sure whether or not they would let me take them out of the country. And so if they didn't, I wanted to, as opposed to just leave them there, give them to my interpreter at the time. Well, you know, hard currency was such a premium, they would not let me leave with any rubles. So it was so strange. Now I was leaving the types of things that I was taking back. I was taking back some beluga caviar, not just some, a bunch of beluga caviar. And as long as you bought it from the state store and had a state sticker on it, they'd let you take back as much as you wanted to. So that was very nice. And I took back my favorite. Now, I don't really drink that much, but they did have a vodka over there that actually came from the original Cristal distillery. It's not the Cristal that they sell here in the United States, and it was infused with cranberry. So it was a cranberry vodka. One of the tastiest drinks I have ever had in the bottle. One of the tastiest things. I've never been able to. I've always looked for it in the States. In fact, there's a at one of the hotels in Vegas. I can't recall which one. They used to. I haven't been there for a while. But they used to have a bar restaurant in there that was all kinds of vodkas. I mean, hundreds of different flavors of vodka. I thought that maybe they would have had it. They've never had that as well. So I was bringing that back with me. But in any event, some of the things I was bringing back, like on the rubles, you know, they asked if you had any rubles. Look, this is a communist country. So whatever they asked, I was, yes, I do. Took them out of my pocket. You can't take those back. I give them to the interpreter, the friend of mine who's right behind me. Give them to him. He sticks them right back in my pocket while these guys are looking at something else. But in any event, so I ended up, I wanted to leave with some of those rubles there. Probably still have those hanging out somewhere at the house. In any event, let's go back and take a look at these markets here. I could digress on and on and on. So in the case of the XLF, no real additional breakdown here, at least today. We did have a little bit of a breakdown here with regard to the bearish engulfing candle. So you've got some resistance up at 1837. You break above that level, and that would be very bullish in my opinion. If we go take a look at the XLE out here, XLE energy sector right now trading out at 78.24. That is definitely showing some signs out here that it may want to begin pulling back. It's got some support at its most recent swing point, which is going to be February 26th, so 75.46 out there. Not a hammer candle. Looks like a version of one, but so far in trading here today, 78.24. Volume is 1.8 million shares. Yesterday, as the market was moving higher, you had really an inside trading session inside the XLE. About 6 million shares out there. To the downside, though, on March 19th, 12 million shares. That's really what we're paying attention to here. Can it break down through there? So volume-wise, 2 million shares, a little over an hour of trading, and it's going to have similar volume, potentially similar volume to the trading session of March 19th. Let's go take a look at the technology sector. We haven't even talked about Apple, looked at Apple or Google today, but let's go take a look at the XLK, see what it is doing. It's the NDX that is down the most, almost 1% out there. So we'll go peek in on the Qs because right now what you've got is the XLK is tagging its most recent area of support out here. So that's going to be March 5th. So we're going to draw a line across the bottom of March 5th. That price point is $29.94. Came down. Now, the volume on that breakout session was 12 million shares. Came back with 6 million shares on March 18th. So that was a nice sign, and it rejected that low. That was a nice sign that it was not ready to break down just yet. In fact, there was a test of it on March 19th as well as the price got down to $29.92, only 7 million shares, not enough to break it down. Now today, it's been down to a price low of $29.93. Again, it's being benchmarked against $29.94. Trading at $29.96 right now, so you're going to have another area that is going to be tested. So this is important because the XLK has been a weak link out here. So we're going to see the same thing when we go take a look at the Qs, we take a look at the NDX, and we'll take a look at all of them. But right now, just simply on the XLK, today is the third test of this level. If this level holds, and if volume ends up being weak, you've got a very strong area. You've got a very strong test of support out here. Volume so far, 1.4 million shares. So that's 1.4 going against 12 million. Even on the most straight line method that you could use out here, that only gets you to 7.2 million shares out there versus 12 million. So far right now, the XLK, which is one of the weaker sectors within inside the S&P 500, that does not have enough volume to bust out its lows here. Now, does that mean it can't go lower? Of course not. In fact, if you get inside the gap, that would mean below 29.94. The second level of support is going to be the day where it gapped up, coming back into where it broke out. We'll go ahead and put a black line across that, and that would be the price point of 978 out there, and that's got 5 million shares. But really, your benchmark out here is the trading session from March the 5th. So that is on the XLK. Let's go switch over and take a look at the Qs, see what the Qs are doing out here. Back when we were looking at the ETFs, we just simply didn't look at the Qs, just overlooked that. So now let's go take a look at the Qs. And let's take a look at that March 5th low. So the Qs here showing more weakness than the actual XLK. But let's go ahead and draw the same lines across our screen so that we're being consistent with regard to what it is that we're benchmarking here. And today you can see prices traveling below that level of support. That, again, it was held 2 times. It was tested. We're also going to draw the line coming across the top here because that was the test from a couple of trading sessions ago. We'll put that one in black. So right now, what we're benchmarking is March the 5th. About 36 million shares to the upside on that little breakout. The first test of that was with 36 million shares, same volume on March 18th, but still closed back above it, rejected that level. If we take a look at the March 19th level, 33 million shares, so that was on a little bit lighter volume. It closed back above it. Right now, today, 8.2 million shares. Now, 8.2 times 648, so it's got volume. So the Qs have volume today. And the Qs, now, you can also see that this level has acted as a reset. We'll call it support number 2. Support number 2 is the March 4th high, 67.69. That is also some support out there that has been tested. You close inside 67.69 on the Qs. That would be somewhat bearish, and somewhat bearish simply from the standpoint of now trying to take another run for that real strong support level, which is 66.48 out there, which has only been broken once, which was February 25th. So far, you've got volume inside the Qs, more so than you did inside the XLK ETF out there. And we'll see whether or not the Qs can bust through. And the level you're looking for here, bullish, you want to see it close above 68.08. If it doesn't close above that, you'd like to see it, if it gets down to 67.69, you want to see it close above 67.69. That would be the bullish case. Bearish, you want to see it close below 67.69 today. That sets up the run to 66.48. Let's go take a look at the, and let's go into the actual index, and let's go see what's going on inside the NDX. That way we completely cover this baby from soup to nuts, from head to tail. So as we take a look at it, on the XLK, of course, you're seeing the 0.786 Gartley sell pattern still out there. We're going to use the same March 5th level, so we're going to draw the line across the screen here. Again, that's going to be in red. We can see this really looking much like the Qs out here, with the exception of 2 trading sessions ago where price did not make its way all the way down to the top of the gap. Let me put that in black. The top of the gap that I'm referring to is the high of March the 4th out there. Maybe that's the bottom of the gap. But it's the March 4th high, which is 27.59.84. So we can see this level now, the low being March 5th, the low of March 5th, 27.76.12. You can see tested now. Today is going to be the 3rd time because you're at 27.75.34. So bullish would be a test of that level and holding, just simply setting up a pretty darn good level of support out there. So that is on the NDX. Let's go take a look at some stocks here that are popping and dropping. Let's go take a look at IBM, because IBM now is the leader in the clubhouse on the way down. It's off $4 and change. That's off 2%. So let's go see what IBM is doing. Let's go see what kind of volume we have behind this move here. Today, 1.6 million shares. This was after making a high yesterday with 3 million shares. So there's volume there for sure to the downside, and making a high. It's got a high volume. They have 7.9 million shares on March the 15th. So IBM makes can it make a little higher high? Let's see here, 215.90. It most certainly did. So it has a high volume high out there. Now this volume-wise out there again is 7.9 million shares today. 1.6 million shares in, a little bit over an hour. So it's got some volume there. We'll see if the volume continues. As far as support goes on IBM, I've got this little black line drawn across my screen here. That black line is from the gap down from October the 10th. And what we're taking a look at is how that acted as a area of resistance on the way back up. So that is what we're going to use right now for our level of support. You also have what looks like a little bit of a gap here between the March 4th and March 5th level. The high of March 4th is 205.19. So 205.19 is most likely where it looks like IBM wants to head to. If it closes back up below that level, then the next area of support is really going to be the January 26 high, 196.08. So you got volume off of the leader in the Dow, number one leader in the Dow. Let's go take a look at some of these other stocks out here. Let's look at Scholastic Corp. Scholastic Corp down 14% right now. Ticker symbol on this is SCHL. How about that? SCHLO? SCHL? SCHL, yeah. School. Scholastic Corp. Oh, look at that. Look at that island reversal pattern. So we had taken a look at this before. So this is about as bearish as an island reversal pattern as I think I've ever seen out here. Maybe not ever, but this is a pretty big one. So look at the black box. If you're watching this on Tiger TV or obviously in the den, you can see this island reversal. Now, this is an island reversal, folks, that really set up between the time period of March 14th all the way down to the April 25th level. Very bearish sign. We saw this equity here gap down back in November, moved down with 1.8 million shares. Looks like it's going to have even more volume today, but it's going to be testing the lows. You had a high volume low out here, November 21st. That level is 25.03. That volume, again, 1.8 million shares. So far in the trading this morning, it has been 815,000 shares. So it has volume. The top of that swing point is 2661. It's at trading at 2679 right now, but it has gotten to 2660. This is going to make its way, it looks like, very quickly down to the level of 2503 out there. You can see Scholastic Corp, all it did on the last bounce here. This is a beautiful thing. Take a look at the Scholastic Corp. So let's draw the line across on this one as well. We'll put this in black here. You can see Scholastic Corp had gapped down November 21st, as we mentioned, did it with 1.8 million shares. As it came back into the area where it had gapped down, where it had broken down, 149,000 shares. 149,000 shares going against 1.8 million shares. I don't think so. Even 154,000 shares on March 13th. And now, today, is there any news on this? Let's see what the news is. Yeah, operating loss of 27 million versus 11 million from the prior year. Their Q3 revenues, 380 million versus 467. So they are getting tasked. Somebody's taking school out to the wood shed out there. Larry P., what happened at Oracle? Let's go back and take a look at the Oracle chart here. So let's go take a look at it, see what it is doing. We know they were out with earnings last night and guidance issues with regard to what's going on in Europe and in China, I believe. I thought we were looking at that earlier. Oh, I'm in the Dow charts. Let's go into the show charts here, and let's go see Oracle. There we go. So that's what is just simply going on out there. Larry, let's go take a look at the daily chart. Let's take a look at the volume in the marketplace. So down with a big volume for sure, coming into that area where it most recently broke out again with a volume of 60 million shares, but today already 51 million shares to the downside. Let's go to Mark in Concord, Massachusetts. Mark, thanks for calling. Thanks for holding. How are you today?
I'm fine, Steve. And how are you today?
Very good.
We are ready for a little bit more of the white stuff.
You must be, because it was mighty chilly this morning on the way into the office here. So I tried blowing all the warm air up to you that we could.
Well, we appreciate that, but, I guess spring has not sprung up here yet.
No, it hasn't.
No, Steve, my question is on the S&P.
Yeah.
You say that that you would not short until 1546.72, correct?
That's the easiest place to go ahead and take a look at getting short. Can you stay on through the break?
Sure can.
Absolutely. We'll be right back with Mark from Concord. We got John on the line from Philly. Looks like he wants to take a look at bonds. 877-927-6648. Dow's off 74. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back to the Money Masters Show, folks. Dow's off 74. Let's go back out to Concord. And so, Mark, we're talking about the S&P 500 index, and the number that I'm looking at for rejection of that swing point is 1546.72.
Now, my question for you, Steve, is what would happen if we closed right here? We're at 1550.11. What would happen if we closed right here, in your opinion?
No information.
Back up to the high, 1576?
Doesn't mean, no, to me there would really be no information. I think that in order for the market to go back up to the 1576 level, which is the high of the swing point, it's just simply once it gets up to 1563, I think the answer is yes. But right now it wouldn't give me, the better test today would be a test of 1546, 1546.72, and then closing back above it. Then that would suggest to me that you've got some pretty decent support at this level, because you'd have 3 different tests of that swing point. Tomorrow would be tomorrow would be important because it's the first time it's a test on a weekly basis. So that's what I would be looking for.
Okay, fine. I got it. Thanks, Steve. You have a good day.
Hey, you bet. Thanks for calling. Let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you this morning?
I'm very good, Steve. Hey, got a quick question for you. Are you bullish or bearish bonds? You yourself, please.
Right now, I did not get in on the long bond trade. I was looking for bonds to get back and test the lows out here from February 4th to get back in. So I am neutral in bonds. I would be bearish on bonds. What I believe bonds may do is go back up and test that January 2nd gap again. They get up there at that 142.29 level, and it holds that level, then I'll become bearish on bonds.
Thanks for that answer, Steve. I just wanted to share an observation with you and your listeners. When I assess and analyze bonds for trading purposes, I years ago was taught and learned to start my analysis using the yield chart.
Okay.
Looking at, say, the 30-year bond yield or the 10-year note yield.
Yeah.
And there's some mathematics and futures derivatives functions that sometimes make analysis of the bond futures messy.
Yeah.
Anyway, so that's what I do as a starting basis. I want to share with you and your listeners something that I find fascinating here. Bonds topped last July 25th. The yields bottomed that same day. There was a rally off those lows in the yield up to the September QE3 announcement day where yields peaked, and then went sideways down into post-election.
Yes.
A rally in yields, decline in bonds occurred thereafter, peaking I think it was March 4th. Here's what's real fascinating, and I posted this chart in the Tiger's Den for you and your listeners to take a look at if they like. Namely, the decline in yields, the rally in bonds this past week has come down, tested precisely, and rejected that swing high yield of September 14th. Something about a trending market, the idea is this that I've always learned. Prior resistance becomes support.
Absolutely.
I think this applies here. Just wanted to share it with you.
That's great. So now, when you were taking a look at that yield here, it looks like you had a 1.272 butterfly pattern. Oh, looks like we lost them. Let's go out to Rick in British Columbia real quick. Rick, thanks for calling. Thanks for holding.
Hey, how you doing? Hey, real quick, you looking for the SPYs to go back up and test that swing high of way back?
The SPYs here, what's interesting on the SPYs is the number is, 154.54. It's at 154.80 right now on the weekly. And, I think it can go, if it...
I'll tell you something. If you could just put the SPY on a 5-day hourly, I don't disagree with you.
Yeah. You know what I've got to do? Unfortunately, we're out of time. But I'll look at that first thing tomorrow morning. Rick, thanks so much for calling. Always good to hear your voice. 877. Well, I can't give you the phone number. Stay tuned. Basil Chapman will be up next, folks. If you're off to start your day, have a great Thursday. Look forward to seeing you in the morning. Take care. Bye-bye now.